Hi, investors. So this week, I'm going to share with you guys something completely different. I'm actually going to share my personal portfolio of ETFs. I have 8 ETFs I have invested in the last year. In the last 3 weeks, they have actually made me over $15,000. So these results may not be typical. When a lot of people get afraid, like when the market was going down a few weeks ago, like I mentioned in my previous videos, you want to do the opposite of what everyone else is doing. So just having a plan, sticking to that plan, and be consistent will give you more gains overall. So when everyone else is selling, that's when you want to get in and invest more money. So as you can see, the market has really gone up in the last 3 weeks. And within the last 3 weeks alone, people have made a lot of money. So these ETFs I'm going to be discussing with you guys shortly are ETFs that mimic either the S&P 500 or the NASDAQ 100. They all fall within my retirement account. So I'll have the benefit of any future money that I make on these investments will be tax deferred till later when I withdraw them. These ETFs will also allow you the ability to essentially set it and forget it. So if your investment time frame is more than 10 years and you want an easy type of investment, these ETFs will be great for you. The current breakdown of my investments fall about 35% in the NASDAQ 100, 52% in the S&P 500, and about 13% in cash. So one of the reasons why I'm holding cash in a retirement account at the moment is because I plan on using some of this money for a house purchase in the future. So I do plan on investing in real estate. And since I have not owned a home for more than 4 years in Canada, I can use the first-time home buyer's withdrawal again from my retirement account to benefit from that and utilize towards my down payment. So another reason why I'm holding cash is because I know that when there will be more volatility, that I will not be tempted to sell any of these ETFs because I'll have some cash there that will make me more secure and safe. As you will see in this chart, the NASDAQ versus the S&P 500 overall, the NASDAQ has made more money and has had higher returns, but you will have more volatility. So currently in my NASDAQ holdings, I have about an 18.5% return on these ETFs. So it's quite a bit higher than my S&P 500, but I am holding a smaller position knowing that the volatility will be there eventually. It's also very heavy in tech. So my current positions in the S&P 500 ETFs that I own are giving me about a 12% return this year. So 12% return this year versus 18.5%. So let me start by sharing with you guys my number 8 ETF. The first 4 ETFs I'm going to share with you are the ones that have given me the least amount of returns this year. They all fall within the S&P 500. So the number 8 ETF is HXS. It's Horizon's S&P 500. It's currently giving me a return this year of 11.16%, and it holds about 8% of my portfolio. Now, my number 7 ETF is VFV. So it's Vanguard's version of the S&P 500. This year, it has earned me 12.23% so far, and it holds almost 18% of my portfolio. Now, my number 6 ETF is ticker ZSP. It's Bank of Montreal's version of the S&P 500. This year, it has earned me 12.49%, and it holds about 16% of my portfolio. Now, my number 5 ETF, and the last one that falls under the S&P 500, is ticker XUS. It has earned me this year 12.84% return, and it currently holds 10% of my portfolio. So my number 4 ETF is the ticker ZQQ. It's again Bank of Montreal's version of the NASDAQ 100 this time. And it has earned me this year so far 17.49%, and it currently holds 9% of my portfolio. So my number 3 ETF is the ticker ZNQ. It's another Bank of Montreal ETF that mimics the NASDAQ 100. And this year, it has earned me 18.04%, and it holds only about 4% of my portfolio. So when I was investing this year, I did not go in all at once. I slowly was investing a little bit at a time. So these ETFs actually have earned a lot more than what I have if you would have started from scratch beginning of this year. Now, my number 2 ETF is the ticker XQQ. It has earned me this year 18.22% and holds 11% of my portfolio. Now, last but not least, my number 1 ETF is Horizon's version of the NASDAQ 100, the ticker is HXQ. It has earned me a whopping 20.28% this year, and it holds about 11% of my portfolio. The ticker HXQ since 2017 has actually earned a whopping 18.5% annually on average, and its current 3 top holdings are Apple, Microsoft, and Amazon. Year to date, its returns are crazy. They're 35.4% so far this year. That is my number 1 ETF in my current portfolio. If you have a look at most of these ETFs, I can only assume they are averaging 20 to 30% returns this year. So if you would have invested all your money in January of this year, your account would be up 20 to 30%. Usually the year after a down year, you'll see a significant gain the following year. And for my dividend investors, some of these ETFs actually are paying dividends as well. So the top 3 ETFs that are paying dividends, the top one is ZSP, that's currently paying 1.42%. And my second one is XUS, which is currently paying 1.29%. And VFV is currently paying 1.22%. So these dividends may only be paid either monthly, quarterly, or annually. So you'll have to look into them. So these top ETFs, the top 8 or the 8 that I shared with you, which are all the ETFs I hold in my retirement account, have all earned me combined $15,000 in the last 3 weeks. So that's why you stay in the market, because if I would have cashed my money out when the market was going down, then I would have missed out on all of those gains. So I hope this has encouraged you to invest in ETFs. They're an easy way to make money in your retirement account or your TFSA or just a regular account. I hope that by me sharing my experience, it has helped you to see what it is really like to invest in ETFs and what you could potentially make. So I really appreciate you guys listening to my video. Make sure to like, subscribe, and I will see you guys next week.